Hi, everybody. Thanks for joining. Before we get started, I want to ask everybody to hit subscribe to my channel to make sure you keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen right now for a special offer from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. All right, so today I want to talk about two of the riskier stocks that I own and whose businesses I really like. They are Offerpad, ticker symbol OPAD, and Nextdoor, ticker symbol KIND. So Offerpad was part of the SPAC IPO boom. So not surprisingly, the stock hasn't performed very well, but it's beaten down to the point where its market cap is just $226 million. That is extremely low. To just put that in perspective, Offerpad's trading for roughly zero point 0.1 times its trailing 12-month sales. If anyone does valuation in any other industry, that's an unheard of multiple. Um, there's a lot to like about this. Offerpad's an iBuyer. Their general business model is to buy homes directly from sellers, do some minor repairs, and sell them directly to buyers. Essentially making the process easier than the traditional real estate transaction. So, out of the major iBuyers, they aren't the biggest. Opendoor is the biggest iBuyer. Offerpad has a better track record when it comes to efficiency, which I think is very important going into a market environment like this. Offerpad was profitable in 2021. It's been profitable so far this year. They're expecting a small loss in the third quarter, not surprising. They've done a great job of getting their average holding period down. They now own the average home for 76 days between when they buy it from a seller and when they sell it. That's down from 104 in 2018. And they're pretty profitable business when it comes to gross margins. I mean, a lot of people say the margins on iBuying don't make it an investable business, but when you're talking about real estate transactions, where the average transaction is, 400,000, $500,000, that's a big chunk of money to just have a pretty small gross margin. Um, Offerpad right now has a $24,000 contribution margin per home after interest. Essentially, this is the gross margin, just taking it into account holding costs. Specifically, they use borrowed money to buy it, so you have to figure out how much interest they're paying. Um, their platform has been adding a lot of features lately. They recently rolled out Offerpad Home Loans, their own mortgage division. They offer title services. They offer the opportunity for people to bundle these services together and save money. They're planning to roll out things like home warranties, remodeling services, and insurance within the next few years. And that could even add to the ecosystem and increase that contribution margin even higher. Um, the market size is massive here. This is really the big thesis with iBuying. Um, Offerpad estimates their addressable market to be about $1.5 trillion dollars of sales volume per year. So their goal is to get a 3 to 4% market share where they operate. Currently, they're around 1%. So they're well on the way. 3 to 4% would be a massive win, especially since they're growing their footprint. They added 7 markets already this year. They expect to be in 29 altogether by the end of the year. And their customer satisfaction is off the charts good. People who have sold their home through Offerpad have a 94% customer satisfaction rating. So really great, uh, a lot of potential, a market that's really in need of disruption, but there are some downsides, specifically the current housing market. Um, Declining home values could create a real problem for iBuyers. I mentioned Offerpad holds its average home for about 76 days. That could get higher in a slow real estate market. And if the home value is declining while they hold it, they might be forced to sell a lot of properties at a loss. So that's something that could really go wrong. So when they report earnings in a couple weeks, I'm going to be watching how this slowdown in the housing market has affected their business in Q3. Again, we're expecting a small loss. That's to be expected in a market environment like this. But as long as it's manageable, I'll be happy with that. In Q2, they really built up their inventory. They acquired almost or over 900 more homes than they sold. So I want to see that they're working their way through this inventory without continuing to build it up, because this is not the type of environment you want to own more houses than you're comfortable with. They were guiding for between 1,700 and 2,000 homes sold in the third quarter. They sold almost 3,000 in the second quarter, so this would be a pretty big decline. But if they can hit that target, I would be very encouraged. And I want to see that they are selling their homes mostly at a profit. Recent data suggests that their rival Opendoor is selling almost 60% of its homes for more than they paid for it still. So if Offerpad could do that, that would be encouraging in this market environment as well. So the second one I wanted to talk about is Nextdoor. Ticker symbol is KIND or kind because their mission is to create a kinder world. If you are not familiar with Nextdoor, they are the neighborhood focused social media platform. They are all over the United States, so primarily domestic, unlike most other social media platforms. Um, their market cap is down to just over $1 billion. They were another SPAC IPO, but that market cap is kind of deceptive because they have almost $700 million of cash on their balance sheet. So the market's really not valuing this business at, at well under $400 million. Um, there's a lot to like about Nextdoor. Its user base continues to grow. A lot of social media platforms have seen users decline lately, such as Pinterest. Um, Nextdoor's user base continues to climb quarter over quarter. They're almost at 37 million active users. Um, just to put that in perspective, Pinterest has a little over 400 million. That's up 26% year over year. I mentioned they have a lot of cash. So even though they are not a profitable business yet, they lost 28 million in terms of operating cash flow in the first half of the year. They have $666 million in the bank right now. That gives them a lot of runway to figure out their path to profitability. It's an interesting platform for advertising. It really is the best fit for local businesses to advertise their products and services. So if Pinterest or if Nextdoor can really capitalize on that, it would be a big win. Their management team is great. Their CEO, Sarah Fryer, came from Square or Block now, but it was Square when she was there. She was the one who really built up the consumer side of their business, the Cash App and things like that. Great leader. They recently authorized a buyback at Nextdoor, which is kind of rare for an unprofitable growth company, indicating that management sees a big discount to the stock right now. But there are some things not to like as well. They haven't figured out monetization yet, and it's trending in the wrong direction. So their average revenue per user of about $1.48 in the second quarter is about one third of what Pinterest is generating. And Pinterest is lower than most of its other social media peers. And not only is it low compared to other social media platforms, but it declined year over year. It declined by 6% from the same quarter a year before. And that's going into what is going to be a very tough environment for advertising businesses. Consumers are spending is looking like it's going to slow down. There are recession fears. Advertisers generally pump the brakes on spending in environments like that. So it could be a very tough environment for advertising businesses going forward. I mentioned the company is unprofitable. It's been losing money. They expect the losses to kind of start to turn in the other direction in the second half of the year. A lot of it was due to stock-based compensation and things like that, which they expect to decrease. So I'll be watching earnings very closely. They report on November 8th. I really want to see how their ad revenue is holding up in the current environment. But Nextdoor and Offerpad are two stocks that could be massive home runs, but they could go to zero if things don't work out well. So I would strongly suggest, again, not personal financial advice. I'm not telling anyone to go run out and buy these stocks, but if you do, don't invest with any money you can't afford to lose. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.